If you have been following the property market, you will have noticed upcoming new condos estimated launch periods as the GLS sites were released. But the real question is this, are all GLS sites good opportunities or are some of them better than others? Because not every GLS site will turn into a strong performing project. So in this video, I'm going to break down how to actually read GLS sites properly, and we will look at two recent ones, Lakeside Drive and Chuan Grove GLS. And if you find this useful, to consider subscribing. I'll be sharing more insights like this, especially with the upcoming launches. Let us start very simply. GLS stands for Government Land Sales. This is how most new private condos in Singapore come into the market. The government releases land parcels, developers will bid for them, and whoever wins the bid gets to develop that project. And the key thing to understand is that the land cost will directly affect the future selling price. If a developer bids aggressively, the launch price will naturally be higher. So when you are buying into a GLS project, you are already stepping into a price that has been determined at the land stage. So how do we actually analyze a GLS site properly? There are three main things I usually look at. First is the land cost, because this tells you roughly where the future launch price will be. Second is the location and the surrounding supply. Are there many competing projects nearby, or is there a rare plot? Third is the transformation story. Is there a bigger plan in the area that will support future demand? When you combine these three factors, you will get a much clearer idea of whether a project has real upside or not. Let us start with the Lakeside Drive GLS. This site is very interesting because it sits within the Jurong area, which has long been positioned as Singapore's second CBD. While the transformation has taken place, there are still ongoing developments in the Jurong Lake district. So from a long-term perspective, the growth story is still there. However, we also need to be realistic. The Jurong region has quite a bit of existing and upcoming supply. So the key question is not just whether the location is good, but whether the entry price makes sense. If the land bid comes in too high, the upside may be limited. If pricing is reasonable, this project can appeal to buyers who are looking for long-term growth potential. Now, let us talk about pricing, because this is where everything comes together. So based on current land costs, surrounding resale prices, and recent new launch transactions in the OCR region, my estimate is that Lakeside GLS project will likely launch at around 2,300 per square feet and above. And to put this into context, we are already seeing nearby projects hitting similar ranges. For example, Sora and the Lake Garden Residences, which are just a few MRT stops away from Lakeside, have already seen transactions at around 2,566 per square feet and 2,556 per square feet respectively. So this gives you a benchmark of where the market is already transacting today. So if Lakeside is coming in at around 2,500 per square feet and above, it is not exactly early entry pricing anymore. You are entering at a level where part of the growth story may already be priced in. So for this to perform well, the Jurong transformation needs to continue and prices need to be supported over time. However, this is also a site where the MRT is just opposite, so there will generally be a lot of demand here. Now let us look at Chuan Grove. This is a very different profile compared to Lakeside. Chuan Grove is closer to the city fringe and the surrounding area is already established. You have MRT access, you have schools and amenities that are already in place. So this is not a future transformation story, it's a location that is already livable today. Because of this, right, the buyer's profile is also different. You are looking at buyers who prioritize convenience, families who want access to the good schools there, and those who prefer stability over speculation. So from a pricing perspective, land in this area is generally more expensive, so the eventual launch price will likely be higher. However, the trade-off is that your risk may be lower because the location is already proven. Now let us talk about pricing for Chuan Grove. Given its location and the land price, right, my estimate is that this project will likely launch somewhere in the range of 2,400 and above. And again, we already have a strong benchmark nearby. For example, Chuan Park have already achieved prices for around 2,793 per square feet. So this gives a clear indication of how developers are pricing projects in this area. So if Chuan Grove launches within or slightly below this range, it could still be considered reasonable in today's market. At this point, if you are currently looking at upcoming launches and you are not sure which one to focus on, feel free to reach out. I can break down the numbers and positioning based on your budget and goals, and it's usually much clearer when we look at your actual situation. So if you look at both side by side, Lakeside is estimated to be around 2,300 per square feet and above, supported by nearby transactions already hitting the 2,556 to 2,566 per square feet range. Chuan Grove is estimated to be around 2,400 per square feet, with nearby benchmarks already reaching around 2,793 per square feet. So interestingly, the price gap between the two may not be very large, but what you are buying into is very different. One is based on future transformation, while the other is based on an already proven location. Now, if you go one level deeper and look at the land cost, this is where things become more interesting. So for Chuan Grove, right, the two plots were successfully bidded by developers, and there are already plans to combine both sites into one upcoming development. The land plots, right, came in around 1,331 per square feet PPR and 1,376 per square feet PPR. If you compare this with the successfully launched Chuan Park, which was acquired at around 1,042 per square feet PPR, you can see that the land cost has increased quite significantly. So if the developer is aiming to maintain similar profit margins, the launch price for Chuan Grove will naturally need to be around around 300 per square feet higher. Now compare this with the Lakeside side. For example, Sora was bidded at around 1023 per square feet PPR and the Lake Garden Residences was around 1077 per square feet PPR. The upcoming Lakeside GLS site, which is just at the MRT, was bidded at around 1132 per square feet PPR. So if you look at this, the gap in land cost is actually not very large compared to the earlier projects. It's a much smaller increase compared to what we are seeing at Chuan Grove, which means, right, from a land cost perspective, there may not be a strong justification for a very large increase in launch price for Lakeside. However, we also need to consider buyers' behavior. Nowadays, many buyers prioritize MRT proximity and overall convenience, so I would not be surprised if buyers are willing to pay a higher quantum for a project that is close to MRT. And from a developer's perspective, they are very aware of this and they may use the MRT factor to justify pricing the project slightly higher. So this is where it also gets interesting. So for Chuan Grove, right, pricing pressure comes from higher land costs. And for Lakeside, pricing support may come from the buyer's demand and MRT convenience. And ultimately, how developers actually choose to price both projects will determine whether these become strong entry opportunities or more fully priced products from day one. Now let me share something that many buyers overlook. Most people focus only on the project itself, but developers are already thinking 2 to 3 steps ahead. They are looking at future supply, competing launches, and buyers' demand at different price points. So when you are buying into a GLS project, you are actually buying into a future price positioning that has already been planned. This is why understanding GLS gives you an edge over most buyers. So here is a simple way to decide if you believe in long-term transformation and are comfortable holding and also is near MRT, Lakeside could make sense. If you prefer an established location with more immediate stability, Chuan Grove may be more suitable. The key is understanding what you are buying into and aligning it with your requirements and exit strategy. At the end of the day, not all GLS sites are equal. Some are positioned for growth while others are positioned for stability. The key is knowing which one you are entering and why. Focus on the entry price, the location strengths, and the future supply. If you find this helpful, to like and subscribe. I'll be sharing more breakdowns like this, especially with the upcoming launches. And if you want a clearer recommendation based on your situation, feel free to reach out anytime. I'm happy to walk you through it. Bye bye.